Hey, Rick McBride here with your Property Masters and 5 minutes of free time. We're back, finally. It's been almost 2 weeks down in Jensen Beach at the World Series for the girls. They did pretty well. And now we're back. We're focused. I want to appreciate and say thanks to the rest of our teammates who picked up our slack. We definitely appreciate that. They did a fantastic job in our absence. That said, today I wanted to discuss Fannie Mae, Freddie Mac, and basically the FHA loosening mortgage requirements, or loosening the debt-to-income ratio. According to the Florida Realtors magazine this month, Fannie Mae, Freddie Mac, and the FHA have loosened their mortgage requirements, making it easier for you to get a loan. During the crash, they overreacted, and now they're starting to work their way back towards loosening up the requirements to get a loan. And what this will mean is more buyers will qualify for a loan. Right now, what we wanted to discuss is the debt-to-income ratio has increased. Debt-to-income ratio, what it is it's based on the amount of debt a potential buyer has divided by their income. So, for instance, a traditional mortgage guideline is a debt ratio of 43%, meaning that a person earning, say, $1,000 a month cannot have more than $430 in debt service in their name. $1,000 times 0.43, 43% equals $430. To calculate your own debt ratio, all you need to do is simply take your total debt service, and when you do this, assume that you're making minimum payments on everything that you have, and divide that minimum payment, that debt service for the month, by all of your income, and make sure that you include any overtime, tips, etc. When you divide that. Using the above example, you would simply divide the monthly debt service of $430 by the monthly income of $1,000. That will give you your debt ratio of 43%. Fannie Mae, Freddie Mac, and FHA have exemptions that allow them to insure loans up to 50% now in some cases. According to the article, this is a quote, Fannie Mae researchers looked at more than a decade and a half from borrowers with debt-to-income ratios in the 45 to 50% range. They found a significant number of those borrowers had good credit and were not prone to default. This does not automatically apply across the board, so just because you're not automatically going to get the 50%. Those wishing to have higher debt-to-income ratios will be closely vetted by the FHA underwriters. So they're going to look at your down payment, your credit scores, a whole lot more, and they're going to look at you a lot closer. But if you have a high credit score, you just don't have, and you just happen to have a lot of debt, say student loans, then you can qualify for more loan. They found basically those with good credit and a history of repayment, they should qualify for the higher debt ratios. So what is the FHA? The FHA is the Federal Housing Authority. They don't lend money. They guarantee loans, so banks will lend money to you. When you apply to receive an FHA insured loan, the money still comes from the bank. It doesn't come from the FHA. What they do is they insure the amount. So a bank will lend to you all day long. They'll lend you up to 80% of the value of your home. But to go above that, they want a little guarantee, a little insurance. And that's what the FHA does. They guarantee your loan. So let's say if you had a $100,000 loan and you defaulted and they foreclosed and they got $80,000 back in the foreclosure sale, the FHA would kick in the additional $20,000. FHA is a government entity. It's our tax money working for the good of everyone else, because of that, millions and millions and millions more people are able to qualify for loans and buy homes and start building wealth, because owning a property builds wealth. Interested in seeing how much you can afford? You might be surprised. Also, did you know it's often cheaper to buy than it is to rent? Let us show you how. Call or text us today at 386-866-1007. Our team is ready to serve you. Have a great week. We should be here most of the week. And if you have any questions or topics that you would like us to discuss, shoot us a text, inbox us, comment right here. We will talk to you soon. Have a great day.